which is basically, the issues, basically, how do, company makes public issues. Okay. So, so company can, raise money either through, as you can see in this chart, the company can raise, money through public, either through initial public offerings or FPOs. So the first time when a company issues shares and it becomes listed in the stock exchange, it is called an IPO. And subsequently, the next time when the company comes and taps the financial markets to raise money, either through equity or through debt or whatever source, then it's called FPO. Okay, now a company can also issue rights shares to the existing shareholders. The existing shareholders have first right, to get more shares of the company. So company has to issue shares to the existing shareholders. But if at times the company can bypass the existing shareholders, if in a general body meeting all the shareholders they give right, through a special resolution that company can raise money from the public instead of from the existing shareholders, or company can raise from both also at the same time. The third kind of issue is called preferential issue, where the money can be raised by instead of raising from general public, company can raise money from selected few, either the qualified institutional buyers, or the company can select few foreign institutional investors, and company can raise money. Okay, I think somebody has joined. Merchant banking. Oh, better. Let's show. किसके बाद? So which course you are studying? So this is not. Okay. So, a company can even give their shares to a select few. That means a company can, offer shares to few, either, financial institutions or through the qualified institutional buyers. Now, who are QIBs? I'll let you know. Now, company can also issue shares, fresh issue. That means for the first time, the company is raising capital and it can call for public to participate. Or company can even offer for sale of the existing shares, like promoters or the startup companies. Some of the, investors, they want to exit or they want to, offload their holdings. So company can raise, here the money will not come to the company, but the money will go to the shareholders who are offloading or selling their shares. So it's called offer for sale. Okay. Similarly, FPO, you can ask questions. Okay. Fine if you don't follow. Manane, are you there? Who are there? Please, let me know. Daksh. Who are all there? I can't hear. Is it some problem with the mics or what? So company can raise money. So I would like to hear your voice. Okay, somebody who are attending. A lot of people are attending, so I'm not able to hear them. Let me just go and check whether you're all there or not.
Yes, sir.
एक
Yes,
बार
sir.
देखते हैं, चलो चलो.
Yes,
Harshita,
sir.
are you there?
Yes,
Pritika,
sir.
Pritika.
Yes, sir. Yes, sir.
So please be attentive, and I'll be asking you to speak something. Okay, when I ask a question, so please reply. So if you don't reply, no attendance. Okay. I have come all the way to the campus and I don't find any student here. Harshita is there. Samya Jain, Shivam.
Yes, sir.
Okay, so be attentive. I'll ask you questions. Okay. Ratan, are you there?
Yes, sir, I'm there.
आप तो अपनी दिवाली बना रहे हो अपने घर बैठे. I am in the campus. Okay. Tejaswa, Sahani, are you there? Tejaswa, Tejaswa, I can't hear your voice. Please, are you there? Tejaswa Sahani. I'm just putting her name so that he'll not get any attendance. Tejaswa, not to get attendance.
Sir, I'm here.
I have some problems with my mic, I think.
So please be attending the class. So I don't want to be, just sitting in the classroom with no one is there. So I want all of you to participate. Okay, fine.
Yes, sure, sir.
Okay, Samaya. Fine, good. So please be attentive. Okay. So this is the most important chapter, and your final end term take-home paper is from this topic. Okay. So so what we are doing is basically, we are trying to understand how the company raises capital. Okay, fine. So I'm just starting that again. Okay. So now, there's, all these public issues, whenever the company is going to raise money from public, so there are certain regulators, I mean, it's not easy to raise money from the public unless you follow all the provisions. Okay. So the first one is called the Security and Exchange Board of India. Okay, so this is, you have to follow all the provisions, and I've shared, ICDR Regulations 2018 on the WhatsApp message, so you can just open up and see what are it's saying. Then we have the Companies Act 2013. So the companies need to follow all the provisions with regard to raising of money, which is there in Companies Act. Then we have the stock exchanges. Now, because the companies shares will get listed in the stock exchange, or if they are already listed, so they have to follow all the provisions, to remain listed on the stock exchange. So both National Stock Exchange as well as Bombay Stock Exchange, and finally the RBI. So these are the four regulators. Okay, fine. Who are the four regulators? Samya,
Yes, sir. Yes, sir.
who are the four regulators who regulate, the financial markets whenever the company wants to raise money? It's on your screen. Can you read them?
Right. SEBI, Security and Exchange Board of India, Companies Act, Stock Exchange, and RBI.
Okay, so these are the four regulators. Okay, and Samay, there would be a question paper, and if you don't listen or don't attend the class, sorry, I'll not be checking your paper. Fine.
Right, sir. Yes.
So this is the final paper which will carry 40 marks. And if you don't attend now onwards any offline, online class, there should be only one offline class, perhaps, or maybe one or two. So you have to attend the last few classes. Okay, all of you, I want your presence to be there. Okay. Then, these are the regulators. So what are the key regulations? Okay, Samya, can you read?
Yes, sir. The key regulations which cover or prescribe requirement in relation to preparation of financial information are the SEBI issue of capital and disclosure requirements regulations 2018, the SEBI ICDR regulations.
Now, this is the one of the most important, and we'll take a complete deep dive into these regulations. And these regulations are called ICDR regulations, SEBI ICDR, and they are called ICDR 2018 regulations. Of course, they were started much earlier, but the major amendment happened in 2018, and the amendments keep happening, and the law gets updated. So they are called SEBI ICDR. Now, on the WhatsApp group, I have shared the complete text of these regulations and a summary. Okay. So second one, Samya.
SEBI listing obligations and disclosure requirements, regulation 2015, the listing regulations.
Okay, so there's yet another, regulations which have been issued by SEBI. They are called LODR, Listing Obligation and Disclosure Requirement. In short, they are called LODR Regulations 2015. Now, if you have noticed, all the companies have to disclose. They have certain obligations for certain disclosure requirements. Like, one of the requirement is that the company needs to, after every quarter, the company needs to publish their financial statements. Okay, their income statement, how much earning per share company has reported, so that the shareholders, which have already been, of that company, they must know how these companies are performing. And perhaps the prospective shareholders, whenever the company raises money subsequently through an FPO, so they can always go through the past record of the company. Okay, so company have to, every quarter, after maybe 15 or 20 days, they have to report their financial, performance. Like, the time which we're talking now, all the companies are in the process of disclosing the second quarter result. So like April, May, June has already gone. So they reported in July. And then, we have July, August, and September. So we are running in the month of October. So many of the companies have reported their financial performances. Like recently, Reliance had reported a good numbers. So whenever these numbers are reported, the stock exchange, publishes these reports, and they have to, also publish these, performances in the newspapers, so that people can, understand how the companies are doing. Then finally, we have the Companies Act 2013. Okay, so these are the key regulations. Then, this is the regulations, like we have the ICDR regulations 2018. Then we have SEBI listing and obligations and disclosure requirements, and then the Companies Act. So these are the three main pillars on which the whole law of public issues have been has been regulated. Okay.